If you are worried about the housing market crashing like it did in 2008, I wouldn't blame you. There are lots of people with scar tissue right now. Either they owned a home back then, or maybe their parents owned a home back then and saw property values drop dramatically. But I'm here to tell you that this is nothing like 2008. We're not in a bubble that's about to burst. Most people equate the word recession with the term housing crash or housing crisis. And that's because the last time we had a major recession, there was a housing crisis, and it was actually brought on by the housing industry. What a lot of people don't realize, though, is that 4 of the last 6 recessions since the 70s, we have actually seen property values increase. In the Great Recession, housing prices dropped by nearly 20% nationally, and in one other recession in the early 90s, when we had property values decrease, less than a 2% drop. So what would the key driver of a housing crash be? Well, it would be a massive influx of inventory. And how might that happen? Well, in 2008, it happened because of a huge wave of foreclosures. Buyers and people taking out home loans were not qualified. They actually called them ninja loans, which is no income, no job, and no assets had to be verified. And that's a recipe for disaster. Basically, if you could fog a mirror, you got a home loan. Today, lending standards are so much tighter. So it's highly unlikely that unqualified buyers are out there buying homes. And those who have had homes for a good long while have built up an amazing amount of equity over the past few years. In fact, double-digit increases over the last 3 years, each of the last 3 years. So those people are sitting on a whole bunch of equity. They're going to sell their home before they go into foreclosure. They have that luxury. Another thing that might fuel a housing crash would be a dramatic drop off in demand. And we're just not seeing that. And the reason is the demographics of what's going on in our population right now. The average first-time home buyer is 31 years old currently. Now, last year, due to the huge generation of millennials, we had more people turn 31 in America than ever in history. You know what? Going to be more this year and even more again next year. So the demand for homes is not going away. If that demand were to drop, then you could actually talk about the possibility of housing prices dropping. Most housing economists are expecting that the increases in property values will slow over the next few years. That's not to say that property values are going down. We're just going to have smaller increases than we have in the past, and that's healthy. In the last few years, we've seen such unsustainable, heated growth in the market that it's perfectly normal to wonder whether we're headed for a crash. The interest rates now, rising from the high 2s up into the mid 5s as of today, are helping to cool the market down. There are more homes coming on the market. There are also buyers who have been priced out. So we're looking at more balance for the rest of 22 and into the years beyond. I'm not expecting a bubble. I'm expecting more balance. If you have questions about what's going on in the market, I would love to be able to answer those questions for you. Talk about what your local market is doing and what's happening nationally. If you think that you'd find this helpful, please give it a big thumbs up and share it with somebody else. Thanks.